Assalamu alaikum. This is Fahad Ali again with a video, and this time the video is all about the financial statements. Last time I told you about the income statement, and now this time we'll be dealing up with the statement of financial position. If you haven't subscribed to the channel, do subscribe it. Do share it with your friends who are preparing for all of this accounting. If there is a question, you can write it down in the comment box, and you can like this video if you liked it. Okay. If you haven't liked my Facebook page, you can write it down. Fahad Ali FHAD space ARI, and you could also go to Instagram and follow me, Fahad Ali 175, FAHADALI 175. You could follow me on Instagram. Okay, so let's start with the video with the statement of financial position. Why do we make this statement of financial position? First of all, we'll be talking about that. Then we'll be proceeding forward with the format of income statement. Let's talk about that. Why do we make income statements? Income statement is most commonly known as SOFP. So let's talk about that. What is SOFP? What is a statement of financial position? The word statement of financial position says that it tells you about the financial position of a business. So let's write it down. SOFP. Okay. It tells you about the financial position of the business. SOFP. What about the financial position of the business? It means it tells you about the assets on a particular date. It tells you about the liabilities on a particular date. And apart from that, it tells you about the equity of the business. That is, equity means the capital of the business. In our childhood, when we started accounting, we learned about this thing that there's an accounting equation which says A is equal to L plus C. This is asset, that means the total asset, the total liabilities, and C capital. There is no subcategory of capital. So we rearrange the situation in this A minus C is equal to L, and we rearrange in this situation that we are saying that this is C, and so on. We got these three accounting equations in our answers. We got to know this. So based on this accounting equation, we make the statement of financial position. Which format is followed in all of us IGCSE? The format is A is equal to L plus C. The total assets should be equal to total liabilities plus capital, and this is how the format has been made. There is differentiation between the types of assets. There are two types of assets, and there are two types of liabilities. If I name them, non-current assets and current assets, and non-current liabilities and current liabilities, there is no category for capital, so that's why we make it as one. So let's see the format and see what do we do with the SOFP. We see the assets, liabilities, equity, and capital on a particular date. On a particular date. What do I mean by that? I'm saying that we want to see that on a particular date in a month. It is made on a particular date. I'll just show you with the help of a format. Okay, see that. In the income statement, we have learned about the profit earlier. We have calculated the cost, we've got the revenue, we got the net profit or net loss depending on the question. So we need to follow this. A is equal to L plus C. Let's see that. Starting from the first thing in the format. XYZ, the title of the person, the name of the person should be at the top of the business. Statement of financial position as at. It means it will be on that particular date, on 31st December. It will always be on the last date of the year of the question, whichever date is given in the question. Motor vehicles, the cost. There are three columns. Cost, DEP, depreciation. Last column is net book value. In this question, for the simplicity purpose, what I have done, I have assumed that there is no depreciation in the question. Okay, so that I could explain you the format. One of the non-current assets which is given in the question is motor vehicles. Second one is premises. We start with this. The cost is given over here. Then the premises cost is there. Zero depreciation on premises. So this is transferred directly into the net book value. Premises is transferred directly into the net book value. I add motor vehicles and premises. I get a total of this. Then we have current assets. Current assets means there are certain things which you have to write down in the same sequence. We do not need to disturb the sequence. The reason is that because the least liquid thing is at the top. What do I mean by the least liquid thing? Least liquid thing means that this takes a lot of time to be converted into cash. Okay, a lot of time. Sorry, I'm fumbling over here. A lot of time to be converted into cash. Okay, so when it takes a lot of time to be converted into cash, why inventory takes the most time to be converted into cash? The reason is that because inventory uh, goes into the production, then it goes to the customer. Some customers pays on cash, some customers pays us later, and that's the reason it is the least liquid, and that's why it is written on the top. Which inventory should be written in the current assets? The closing inventory. I've already written it down. Where do we find the closing inventory? We find the closing inventory outside the trial balance, that is in the additional information. Whenever the trial balance will be given to you, in the additional information, the first point 99% of the time will be of the inventory, and it will be written down like this: inventory at 31st December 2020 was this dollars, whatever the amount will be given. You will directly copy that amount in the second column. So why not we are recording it in the first column? The reason is that because there is nothing added or deducted in the inventory part, that's why we are writing it down directly in the second column. Trade receivables, for the simplicity purpose, I have not deducted any bad debts or any provision for doubtful debts. But if the question is giving you something, so what you do, you deduct bad debts from trade receivables, then you deduct allowance for doubtful debts in this column, and then you record the final answer in the second column. Okay. Then we have the third thing is cash at bank, whatever bank amount is available in the bank, and the last thing becomes the cash in hand. You add all of these four and you get the answer in the last column. You add this and you add this, so once you have added both of these, you get a total, which is total assets. Okay, so total assets are there, and we have to prove this equation: A is equal to L plus C. So we need to go forward. So I have just put the double underline over here just in order to show the examiner that the question has been completed. The upper portion has been completed till here. Equity and total liabilities, I have given the heading. Then we have started from capital at start. The item capital will be given in the question. So capital at start, this will be the amount. Add slash less. If it is net profit, we'll add it. If it is a net loss, we'll deduct it. We'll keep it in brackets. It depends on the question. Less drawings, again given in the question, sir, where the net profit or net loss will be given. The net profit or the net loss will not be given in the question. It will, the examiner would have asked you earlier to calculate the net profit by making the income statement. Okay, majority of situation it will happen like this. So you get it from there once you have done the income statement. And there is something else. Sir, what if the net profit becomes wrong? So your marks will not be deducted in this, because there is no carry forward, error carry forward, marks deducted. Let's suppose you got there was 1 mark for this over here, and your net profit was wrong, so your marks would have been deducted earlier in the income statement, so your marks will not be deducted over here. Okay, you will get the full marks. Less drawings you deducted, and in the end when you plus both of these minus this, you will get this answer in the third column. Now you have non-current liabilities, which is bank loans and debentures. What is debentures? Debenture is IOU certificates. That is a company taking a loan from an individual, so they will issue an IOU certificate and they will give interest in terms of percentage to the individual. Okay, so the bank loan comes in the second column, debentures come in the second column. We add both of this, we get the final answer in the last column. And the last thing is current liabilities. There is majority of times trade payables, which comes over here, so you write it down. You add this, this, and this. Your answer, this answer should equal to this answer. The reason is that because we have to prove this equation: A is equal to L plus C. If it doesn't match, then there is a problem in your question. First thing. Second thing, remember one thing. This is majority of times just because of a wrong net profit or net loss you have calculated in your question. Okay, so don't worry about that. There are no marks available for balancing in your answers, so do be thoughtful of this thing. And second thing which you need to remember is that in many of the situations there are no non-current liabilities available in the question, so just skip that item. Don't try to find the non-current liabilities in the question. Okay. I hope you liked the video and you understood everything regarding the balance sheet, statement of financial position. If there is anything you couldn't understand, you can comment below, you could ask me. You could just go to my Facebook page and you could click the WhatsApp option where you will get my number and you can chat directly with me. And another thing could be, you could just go to Instagram, Fahad Ali 175. You could just go over there and follow me if you haven't followed me. If you haven't subscribed to the channel and watching it without subscribing, I'll suggest you do watch it because you will get a lot of good videos in the future time period. So thank you for watching. Thank you for giving your time. We'll meet again inshallah in the next video with a new topic. Goodbye. Allah Hafiz.